Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, June 8th, 2012. Access to this webinar is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, we expect you to take responsibility for your trades. After all, it is your money, and who loves your money more than you do? So therefore, it is up to you to take responsibility for that. With that, let's take a look at the week that was, and as we look at it, we see that we had not a whole lot take place during the previous week. Not much. Factory orders was the biggest announcement we had on Monday, then that certainly was not something that would move the market. ISM on manufacturing index actually came in pretty decent for the market. Again, not a big movement for the market. And as we came into Wednesday, again, not much there to move the market. And finally, Thursday, which was yesterday, we had our jobless claims, which basically came in as expected. So that was a number that certainly helped the market, and we saw a nice little gap up in the market as we had a bullish week. As we come into Friday morning, what do we have on Friday? International trade at 8:30, wholesale trade at 10 o'clock, neither one of which are economic announcements that will move the market. So it was not a market that was moved by economic news. Europe didn't have much effect on the market during the last week, although there was some sentiment that Europe was going to finally start dealing with its problems, but it was really a lack of news that came out of Europe rather than any great news moving forward. And so as we see, not much happened during the last week, and what we got out of the market was a technical bounce. And let's take a look at that technical bounce as we look at the SPX, and we see that we have the last 4 days of the week sitting right there. And here was Monday where we got a bottoming signal with our doji, and then it followed through, and we got a technical bounce, a bounce which we expected. And it doesn't mean it was going to happen, but we certainly expected. It was the bounce that we were waiting for, and the bounce that we talked about at our last meeting, which was Monday. And we saw that we got follow through, and we of course had that huge day on Wednesday that gave us that big move of almost 30 points in the S&P. And then on Thursday, we got a bit of a disappointment. But you see that as we look at our overall trend, we are still in a downtrend. We're spending our time below the moving average, which is our primary moving average of our 30-day moving average. And what we're looking for is we're looking for some kind of technical bounce that will put us in a sideways trend, switching from the downtrend that we're currently in, headed for a sideways trend, to determine what our summer trading range is. So far, it looks like we could have a potential sideways trading range between 1330 and down here of around 1265. I'd like to see that actually spread out a little bit further. We'll see what happens as this moving average starts flattening out a little bit. In order for us to have a sideways range, the price must spend its time above the moving average and below the moving average. So far, we're spending all of our time below the moving average. We had this big diagonal trend line that so far has been controlling the market. We had a bounce above that on Thursday, but you notice we couldn't hold that bounce. As we look at the day, in fact, let's look at a little closer chart on this. And when we do, what we see is that what happened on Thursday is that the market made a big move up. The bulls tried to take control, and they had control through part of the day, but when it was all said and done, where'd we end up? Very near to that diagonal trend line. So we really haven't broken up into that newer area. Our previous resistance was here at about 1330. We didn't quite make it that high. If we get follow through today to the downside, we're going to reverse this up cycle in our downtrend. And then the key area is going to be for us this level down here to see whether we can maintain some kind of support down here or whether we're going to continue lower than this low for a continuation in the downtrend and a bear market. So far, we're not there, but what we are is a downtrend. Our next trend is a sideways trend, but we just don't know when that sideways trend is going to happen. In order to have that sideways trend, price spends its time above the moving average, below the moving average. So far, is just a below the moving average. So we're in a downtrend. We just had an upcycle. We had what looked like a reversal signal here, but that doesn't mean anything until we get confirmation of that with a lower low and a lower high from Thursday's move. Looking at Thursday's move, it was a kind of an interesting day. It had a pretty tight trading range all day. This is a 3-day 5-minute chart, and as you can see, this is a day, this is a day, and this is a day. And as the week showed us, we had an up week in our downward trending market, and we saw that what happened on Thursday on our 5-minute chart is that we opened high. By 10:30 we settled down. Here's where we are, right around 10:30, right about there. And then what we did is we traded in a very tight range of about 6 points through the entire day. No big range for the market. And then at 3:30 it just gave in, closed the gap from the previous day. And what we saw was weakness in the market, and we ended up with that doji on Thursday that looks something like that. All right, and so what we'll wait and see today on Friday is, are we going to get a lower low, or are we going to continue our move back up with higher highs and higher lows? And so key in off of Friday as we go into the weekend as to which way this cycle is going to go. So with that, that's what we're looking for on Friday, and our key move will be is we'll check that opening high low for the first half hour and determine where we spend our time after that. And that'll have an impression on us as how we'll trade next week. And we will review that on Monday morning before the market starts in our market forecast. So we had an up week, an up cycle, in a downtrending market for the week. Now let's take a look at the Dow, see if it followed the same form. And there we are. There's the Dow. There's the week. And we saw that we had a nice little upcycle in this downtrending market on the Dow. So it followed the S&P for the week. Let's take a look at the NASDAQ next. And we see that 200-day moving average acted as support for the NASDAQ. And we got our technical bounce. But look at that. NASDAQ led the way up in the morning on Thursday. But look at that big old red candlestick, a bit different than the Dow, a bit different looking than what we saw out of the S&P, as the NASDAQ led the market up and led it back down. Didn't make it to the 30-day moving average. They made it about as close to the previous resistance as the S&P did, but showed a bit of weakness as it led the market down on Thursday. Key on the NASDAQ may show us where we're going for the week. For Friday. All right, and same type of look out of the Russell, as it also led us with that big red candlestick rather than the doji coming out of the Russell. Again, we did end up with an upcycle in our downtrend. All indices are in confluence with each other, and actually that's quite normal. We see that all the time. We saw that the VIX, which had peaked up to around 28, finally began pulling down as the market went back up. That's to be expected. We're still sitting above that 20 level. Basically, 85% of the time, the market spends its time between 14 and 20, and we are outside of that range as there is quite a bit of volatility in the market. And if we look at our average true range for the S&P, we see that we're up about 17, 18 points a day, with a bit of schizophrenia as to how the market is moving in big moves during the day, and in general, big moves up, big sell-offs, a lot of action for the day traders coming in the market at this particular point. little more difficult for those of us that are looking at weekly swing trades, as we see we get these different moves. But it is interesting that as we looked at the different markets during the week this last week, we were looking for that technical bounce. We did get our buy signal on Tuesday, and so exactly what we were looking for that happened. And those of you that took advantage of some of the weekly options, or even took advantage of swing trades with stocks, whatever your favorite trading strategy is, it ended up being a payday for the upside, as we did have 4 solid days to the upside, and you certainly should have been able to cash out of your very short-term swing trades, which is what you do when your VIX gets up this high. Short trades, going in, popping out 50 cents, 60 cents on your spread trades. Certainly you could have popped out more if you are a call buyer or a put buyer, depending on whatever your favorite strategy is. Bonds for the week, which peaked up when really was quite shocking as to how high the bonds have gone as the market has pulled back. It providing a haven of safety for investors. Certainly pulled back as the market went up during this week as money moved out of the bonds and treasuries and back into the market as we saw this little move. Key area is what it's going to do next. We have a potential reversal signal going into the weekend. We'll see whether that reversal signal gets confirmed on Friday morning. Next, let's take a look at what the financials did during the week. Financials in general will follow the overall market. We've seen that take place. Remember, it wasn't that long ago we had 15 days that basically kept heading down in the overall market, and so did the financials. And we see now that we got the technical bounce, although we had a lag for the financials to take off, spending its time below the 200-day moving average. Finally got that buy signal, and now we got that Thursday move, which is a potential reversal signal. We'll see whether we go sideways at this point and we get a potential bull flag moving up higher, headed for that 30-day moving average, headed for that previous big area of resistance up here for our summer trading range, or whether we come back down and go down and retest this low, which is at this level right here. We'll be able to tell. One of the great things about candlesticks is candlesticks are a real-time indicator. Most of our indicators, such as MACD, stochastics, average true range, and all of these, are lagging indicators. Most of our oscillating indicators are lagging indicators. But when we look at our candlesticks, they are the one true real-time indicator that we can use. So it's important that you understand what these signals mean, what higher lows and higher highs mean, and the reverse, so that we can utilize and take advantage of these candlesticks to give us real-time signals. Next, let's take a look at oil. As we take a look at oil, look at that oil as we've had a huge pullback. Normally, I expect to see oil go up this summer as they take advantage of summer traveling, and we see that we've had a big pullback in oil. And oil seems to be a bit confusing to me as to which way it's going to move and what this season's cycle is going to be, because it's been so manipulated in the past couple of years. But we see we've had a pullback, and it has been reflected finally at the gas pumps. All right, with that, let's take a look at gold, which certainly sold off as the market started heading back up. That safety haven, which had its big jump this week, a big gap up right here. We see that during this last week, the gold had its pop up, and with yesterday pulled back appreciably. So gold certainly had a bit of a move during the week. A bit hard to trade that move, as it really gapped up and didn't give us much chance for a decent entry. Looking at the volume for the week, we saw that we had big volume on Friday of last week, which basically was the beginning of the change, and we saw that the volume was pretty steady through most of the week as the market moved up. And no great amount of volume. We had other areas where we had peak volumes. During the week, it went up on a nice average volume for the week. So the SPY showed us exactly what kind of volume we had. So with that, we've kind of looked at the market as it took place during the last week. And for those of you that Our gold members, stick around. We'll look at our stocks to watch, see how that affected these charts, which were some of the other charts we were looking at. One can trade the overall market, a very diversified fund, by trading the SPX, by trading the NASDAQ, by trading the Dow, by trading the financial ETFs. And one can also go and look at individual stocks. So those are gold members, stick around. We'll see the effect that the overall market had on these momentum stocks to see whether we had potential, which we talked about for entries when we met last Sunday. And so for those of you that are gold members, stick around. We'll continue with the stocks to watch. For the rest of you, thank you so much for being here. And we'll see you again on Monday morning as we look at next week and a forecast of where we're headed. This is Butch Shorak. It's For Options University. It's Friday, June 8th, 2012. Trade well.